Good morning. Oh, yesterday, it looks like it was a bull trap, right? Uh, that rally off of the low was relentless, and it didn't change anything on the hourly chart. It just came up to resistance, and but it did. There was that void, and it stopped there after the greater than 100% retracement. You can see here, and I would assume it was more of a short covering rally as that went up, as it just kind of creeped its way up until it got above. I don't know if I have it on here where it took off right here. This is 24 hours, but this was right at yesterday's close, and when it went positive for the day, it just took off. So here's inflation. Uh-huh. Right, we talked about interest rates going up and the dollar going up over the last couple of weeks, and be careful for that. And now it's all come home to inflict the damage that we knew was possible and likely probable. So here it is. And so now, it stopped at the 200. Prices are below. I mean, they got a tag to 200 MA, you would think today. They have to, but that's the next probable point. And this bar right here is a pivot on the hourly chart. You can see right here. And so there is some support, and traveling down from here to already here, that is about the average day to day, and it's going to be on a gap. So it's a new starting point. So the good part is, as far as stabilization, is that it's not gapping down under a base. And it was going up. So it's a bit of a shock. It's gapping down underneath here, but the move down and the move up again, just kind of like this whip back and forth. It's very different. Now we'll see. I'm just explaining the historical, typical scenarios, meaning, rather than having what we have here, it was going sideways, all day, and it builds up that level of supply versus, this move up and just gapping down below here. So similar, this is kind of a messy kind of consolidation up there, but you get the idea, where it's going sideways after a move up. And part of the assumption is that sideways price action, or buyers stepping up, they believe it's going to continue to go higher. Someone's obviously selling, or would have kept going up. But when the realization happens and it breaks lower, you have, this supply area up there to drive prices lower. And yesterday, things wiggled around as they did. And so now, obviously they're gapping lower. All right. And so, we said, well, lower to where? Well, the 200 seems to be an obvious place. Now, is there anything lined up with the 200? So here's the 200, and that pivot is over there to the left. And so it doesn't have to be a perfect stopping point. Not yet, Rob. All right. All right. So this is where they're at, as we always look at spiders, because SPX doesn't show us the data. We look at where that's at, and we look over to the left, and the pivot is lower. We have to go down here. You see 3,894-ish or whatever. And the 200 MA is at about 393, give or take. Right. So somewhere in the area of this green box, right, where prices, from here all the way down there, you would think it's going to stop. Bear run today, Miami. What? Bear run. I don't know about a bear run. I would say bulls are, it's a bull trap yesterday, but this did break down. So yesterday's bottoming tail, while was supportive of, hey, we all knew was coming, right? And if the news was positive and they traded above this bar's high, it could have went up here, and then we'd see what happened. The news was negative, and so now it's going down in alignment with what we believed was going to happen. As this correction began up here, as the internals reached an extreme, and it was looking pretty good, like it was working that off right down here. But sentiment never backed off. So the option traders just kept buying those call options, saying, oh, it's, not a big deal, not a big deal. And they could have been right, of course, but now this news is driven market, negative news. So assuming, today's negativity is going to follow through, 3,900 eventually, maybe down here. We'll see where the day ends, of course. And we'll look for this sentiment to eventually come into alignment with breadth. And it doesn't have to be a straight down move. It may take a while, so we'll see how that plays out. All right. So you see the futures getting close. So the 200 MA on the futures is not going to be in the exact same place as on SPY or SPX. And so if you're looking at futures, keep an eye on that. There's nothing to the left of those futures there. So it's just a relatively large range. It wouldn't take much to get down there. There's nothing over there to stop it. And, just compressing that just to see. Oh, this broke. You can see it's on that pivot right there. This area down here at this congestion area. So I don't know if we can get down there today. We'll see. It's moving a pretty decent amount, but I think tagging the 200 as a reference point for futures traders to say, hey, it's on that 200 MA. It's down a whole bunch over a few days. Let's give it a shot and see, what happens. You can see that vertical move on the news, and things are just stalled here for the moment. All right. So SPX, which I think is going to be I think it's a no-brainer today. Right? So just looking at where things are at. Right? We know they're down here a little bit. The ranges have been about 60 points over the last few days. So I just put these lines here. Right? Obviously, it's not going up here, but there's no premium. So down here would be about that 60 points, but give or take, it's pretty close to that. So if we do this and drag it down here, there's premium down here. Last I looked, it was 85 by 90. And assuming we get a little bit pushed lower at the open, there might be some juice at 80, 38.80 or a little below. So to come all the way down here today, I mean, that has to be a catastrophe kind of a move. So and that credit spread, we just think is not going to get there, so I think that's a no-brainer down there to have that premium. I'm just looking again. Yeah, 38.90. 38.90. So 85 is the pivot. Is that pivot down there? It's close enough. You got the 200 MA in the way. Here's this pivot and the 200. It's down a whole bunch. And then it's got to travel another 60 points to get down there. That's a reasonable bet that it ain't going there. So, all right. 10-year. All right. And it backed off yesterday. That held things and so far. It's holding up. Just reiterating, we talked about, this coming down here. Be careful with the longs. And then they did a little fake out move there with that bottoming tail bar. And so now, it cleared that pivot at 4%. It's like the whole number. There's resistance up there. And with today's economic number, look, buyers have been confident. Believe me, their confidence has to be shaken at this point and just kind of thinking, you know, what do I do? Right? Buy some puts, right? Which is exactly what we want to see. The bearish sentiment come into the market, and this keeps going up. Obviously, it's not going to be good. And the dollar, that's pushing up way up there. And so again, we talked about this over the last few weeks, and everything else is bearish, going down. The Dow breaking through, right? This support that it's been on, this has got a void below. Now it doesn't have to go down there, but there's very little to stop this. And this is what I was talking about before. Whereas, look, we were talking about the futures and SPX and whatever going up like that in the V. And, here's your little sideways consolidation. But this is a monster sideways consolidation. And now it's breaking below here. So unless some miracle happens where it whips right back up into the base, I mean, the 200 MA should be a bunt on this. And then you got this pivot low hanging down here. And so we'll see what happens when it gets there. But this is, exactly what I talk about as in explaining what a price void is. A momentum move, a price move, and then a correction through time, moving prices away from any support. So with a situation like this is now supply. And as this comes down, while that might be a stopping point, historically, a pattern like this, is just going to be a stopping point. Now, I don't want to predict this. I don't want to get too ahead of myself here, but historically, this pattern could come down here. And we'll see what happens over the coming weeks. Everything's a possibility. So possibilities are our bias about possibilities come from charts. Now, if this, with this here, this kind of M top that was forming, we're not going to be thinking it could come down here, but we could be thinking, sure, come here. And it didn't. It went back up and continued to make this big top. So different patterns, different possibilities. Now, this is where the real damage is likely to be done with those interest rates continuing to go up, because that's exactly what happened all the last year. So now, and we'll keep an eye on NVIDIA that did so well, and these semiconductors. So it's a different time. I don't think we're going to get the exact same kind of negative reaction, but we'll see how this unfolds, because, the supply chain thing, and I really don't know about the supply chain with semiconductors, but I think more cars are starting to become available. That was a big thing, and whatever these semiconductors are being used for. So I don't think it's exactly as bad, but with interest rates going up, this tech land should correct further. And so this is sitting on support. It's right there at the 200s. You may get a blip lower here and things begin to stabilize today. So, keep an eye on that. Russell, we'll see how this ends the day, but assuming a negative thing, that is going to produce what we call a measure type of a move, right? Where usually ends at a major support point. So the 50 MA is probably not going to hold. It shouldn't hold, even though it's got this bottoming tail there, which is a pivot on an hourly time frame, but it's likely to come down here. We looked at the 10-year. Right, transport's got to get killed here a bit. Right, another continuation type of a move lower. This is holding up pretty well, but we know it has had historically a pretty good correlation with, moving with the markets, and it is at this resistance point. I got my alert here to see if it tags there, and another one down there. Anybody else done with swing trading? Great setups that fall over and over. I'm sticking to day trading. Josh is saying in YouTube there, I guess getting whipsawed by the swing trades. it's been an erratic market environment for sure. January was good, and now, as that correction began, when you start seeing this kind of price action, overlapping bars, swings are going to get crazy. Anyway, all right, you see what's going on here. And, we reiterated here time and time again that, gold is going to be a victim of what happens in the dollar. The dollar continues to strengthen, gold goes down, and vice versa. So as the dollar comes up to some resistance, if that begins to stabilize, this might start bottoming out again like this, and we'll get a long trade in gold. So good intermarket relationship, that it's closely correlated. So good information. Take into the future. And well, we got this mess in crude oil. We'll see what happens there. Right. So, okay, all yours, Dan.
Good morning. So yesterday in the video, the nightly video, I just very clearly said, we had a buy set up here. We had a bottoming tail over yesterday's high. I had a bias for a bounce under yesterday's low. I have a bearish bounce, to the next support level. Greg talked about all that. Kind of measured moves down would really get the internals cooked. And so now, yeah, I don't think we're going to recover today at all. I think sentiment's been shaken enough with this interest rate stuff, and now PCE thrown in your face, and that I think the bulls are scared, right? Rightfully so. So I don't think it's buy the dip day at all. Let's see, we did a couple earnings trades. Carvana, bottom right, we shorted and their earnings were horrible, so it's gapping down here, but we did the sevens, so we still have $1.50. I'll obviously watch all these, but I'm 99% confident we'll have a open gain at the open, because these are expiring today. I think we sold this one for 28 cents. We did where are you? We did Beyond Meat. That's a nice, beautiful gap up with a little kind of buy set up here, bottoming pattern on the weekly. I'm going to keep an eye on this. Man, I wouldn't call this piece of garbage a 4 long. But if it sets up on the daily, I think this can go to $25 fairly easily on the weekly. And we did what's called a short strangle, and that's on Square. We shorted a 86 naked call, 65 naked put, and it's gapping up, a couple bucks, but we're gonna have a beautiful open gain on this because it's expiring today. So I said, let's just bid a nickel to get out of that one. I posted these in Telegram earlier today. Home Depot. Yeah, multiple time frames though. 15-minute chart is 100% retracement. So I surely would not be doing it at the open myself, particularly with the big gap down in the market. We just gotta sit back and see where it's let the bulls decide. Ideally, we get a continued sell-off for 30 to 60 minutes. That would be my preference. Get the rubber band even more stretched than it is with the gap down. SGU, it's light volume, but over yesterday's high, sure. Autodesk, yeah, I'm in Autodesk also, Rocco, so I'll keep you posted what I do. Yeah, I got the 205s, 195, so that's we're, I don't know what it's gonna be at the open. I think we shorted it for 90 cents. Probably gonna have it's probably $2 of comfort is all, so that's really close, but I'll keep you posted. I'm in that one too. And I might be trying to get out and break even or a small bounce. But I'll watch it. So here's some other earnings. Let's see what's going on. Charlie Mike, no prints yet. No prints, but wow, that's a bullish daily, weekly, monthly. FMX, IEP, no pattern. Kind of opening flat. I'm just going to delete you. EVRG, I don't see any prints. Lamar, it's kind of, it's kind of a bull flag looking thing, even though flagpole's long. I'll come back to you. Dino gapping down. So this is a short, a 30-minute low, short watch. Fiber, no prints. GTLS. I can't tell where it's opening, but bottoming pattern. If it is gapping up at 133, then 30-minute high and or put spread. No, I did not. I never got filled on DPZ, Rob, and I got subscribers out break even yesterday on the bounce. It looks lower right now on the 15-minute chart. But if you're in it, of course I'll help you with it. Absolutely. CRI get down to 71. This is prior lows. We'll come back to it. This is a big mess, low volume, deleted you. We'll come back to you, but it is bullish. CMK gapping down, no pattern. Oh yeah, if you don't mind doing that, I'm Rob. Sure. Gapping up 587. You know, I got enough to look at. Tabla. Yeah, I don't like trading $4 stocks. SSP, light volume. I don't like the way it trades. GTN. I'm gapping up a little bit. We'll come back. There's a void, relative strength. 1165, gap into resistance, no interest. ACMR, no interest. TPB, can't tell where you're opening. This could be a long or a short, depending on how it sets up in the first 30 minutes. Dunking, this is just on my watch list for a core long over a prior day's high. It's bullish daily, weekly, monthly. Here's some more earnings up here. Yeah, here we go. Intuit. All right, so that's the one. Intuit. No, I'm not in Intuit. I think I was thinking about the 380 puts yesterday. I forget, but we'll come back to you. Are we booking? Are these earnings today or yesterday? Okay. Earnings. Booking. No pattern. Oh yeah, these were yesterday after the bell. I seen them. Gapping down 114 EOG. Yeah, there's oils has been weak lately. Mealy. It's kind of a massive bull flag. If you put your flagpole here, you can kind of see it better here. You see the bull flag here on the weekly. So we'll come back to you. Autodesk, that's the one that's gapping against me. All right, yeah, these are our other ones we looked at. Warner Brothers, gapping down, no pattern. We'll come back to you. I don't see any prints. I don't like the overlapping bars, GIX. This under, yes, I can't tell where it's gapping, but set an alarm. Yesterday's low would be a short breakdown. Pod over yesterday's high would be a put spread. It's a bullish weekly, monthly. PBA, we'll come back to you with a put spread idea. Yesterday's high. I'll just set an alarm actually at 33.50. I'll come back to you. Off. It's a nice turn. Nice turn at the 50. We'll come back. No pattern. No pattern. CE. I show one print here at 111. So that has room. That's 30-minute low. Short. AMH. We'll come back to you. LSI. No pattern. PEN. Strong uptrend. Cube. No, can't see any prints. FMD. Gapping up. Gap's too big. If this were gapping up just over yesterday's high, then I would like it as a day trade long, but it's gapping too much. All right, so I did all those. These were just other things I wrote down. Let's see what I got down here. Timber gapping up. Wide and whippy trading range, but let's see how it closes. This W whiskey I read in the journal, it said it was its worst single day loss in history. It's life. But look at this, look at the 15. This was a climactic deep retracement, and this is a buy setup. So this could turn out to be a beautiful, I'll put it down here. That could be a beautiful day trade. Raul asking about postage line and 0 DTE put spread. Yeah, I like it. Yeah, it's a buy setup. I wrote it down there. SGML, nice gap breakout going sideways. I'll keep it on the list for next week. SING gapping up from a buy setup, bottoming pattern. Gap's excessive though. What the heck is going on with this? Man, this like went from $10 to 140. Crazy moves. All right, so we're getting the 5-minute cues. Sand spiders have double bottoms. Looking at the pre-market 5-minute charts. This is 15, but well, look at upper right here, spiders. Say pre-market data, we have a nice little retest here. So that's why I said you can't come out of the gate. I'm thinking short. You gotta see what happens. All right, Carvana. Yeah, we got a nice open profit. Square, let's see what the midpoint is right now. The midpoint's 4 cents. All right, so let's close this. It's 3 cents. Let me see if I'll just See what I get filled at. Not filled at 4. Let me try 5. Why is this guy not filling me? The midpoint is 3 and he's not filling me at 5. What is going on? This makes absolutely no sense. All right, because I can pay 3 cents for the calls just by paying the offer. So let's do that. Close the short calls at 3. Oh, you were? All right, excellent. I don't know what the hell was wrong with mine. All right, I'm gonna do the same. Okay, I did 2, but I had to put them as 2 individual orders for some reason.